our normal banking models, right? When they even write off a loan, the Bank of Ghana is still on the neck of these banks to still go after you for the loans that they've made provision for and written off. I mean, provision for and written off in the sense that, I mean, when banks declare, let's say we have an agreement, you have to be paying this set amount of money or interest and principal at a particular point, you are not going to, according to it. I mean, it is declared as a bad loan, right? And there are provision for it. That's smart accounting, you know. They've already made provision for it in advance. But Bank of Ghana say, hey, despite making provision for it and slapping it against your profit for the year, whatever it is, you should still make effort to go after the people and then recover these funds. And I think I saw.
But is that going to mean that if they go after, they're assuming they find it, they come and unwrite it off?
Yes, so we call something impairment recovery. So it was written off, and so it is recovered. So it's a slap back on the books. You get it.
So then why would they have to write it off in the first place then?
Yes, so that is from the banking and I mean the bank and the lender's perspective, right? Now that's why regulations really matters. So from the bank and the lender's perspective, look, you have written it off. I can just declare it bad loan and just stop chasing after you, because then it becomes costly. But the Bank of Ghana says no. You should still go after them and then recover these funds. And I believe this same model that is, you know, in our regulations to fight the moral hazard part of lending will be transferred directly into the Islamic financing. And that will help us, that will help the lender mitigate that risk. And also on the cost side, right? So we don't have a running like Islamic bank so far, but looking at the other models, right, or the other countries, I'm biased towards Nigeria because of how close it is to us in terms of most of our economic fundamentals, right? Now, in the Nigerian model, right, you don't just, I mean, like you said, if you have thousands of clients, it will be difficult going after them all. But how these models run is that there's a general product line, right? There's a general product line which has been really assessed. There are general criteria for the product. For instance, if you are financing SMEs in the agricultural space, right? It's a whole product that has been developed with funds earmarked for that particular in financing. So the assessment has been done on a broader level. So before you get in there, you are assessed, you go through the criteria, and for them, they're able to flag out the model or the guidelines that are outlined prior to the rollout of the product is able to flag you out. And I would like to, even from our normal banking model, I remember I was flagged out of a credit before, even though I'm working and I had a needed fund and stuff. What was it? It was because I was in the financial space. You know, from the banking sector cleanup, some of the banks developed like a credit framework that's shown lending to players in some financial sectors. You get it. And so it's able to do that work, and then it tames what we call the moral hazard part of it. On the lender's part.
Okay. John Jones weighing.
Okay. I think I mean we should not be too worried about I mean the lenders' risks, because I mean they are whatever is come to implement, whatever we are going to implement here, we have set up a clear regulatory guidelines and ways that, I mean, will predetermine who qualifies for any kind of financing. And I'm sure, I mean, it has been practiced as well for over a long period. If you look at Malaysia, it forms a larger part of their banking system. If you look at even the Gulf, I mean, the Arab countries, and it's working. Just, I mean, as I said, in Ghana here, I mean, history suggests that in terms of, we have a lot of risks, but I'm sure we will be able to come up with that.
Absolutely. I'm going to take a very short break. When we come back, we're going to look at now the specifics of how the lender does it, what form of financial arrangement would they enter into with the borrower for them to achieve their success? And it's still the Focus on Z101.9 FM, your lifestyle, leisure, and business platform. Take a very short breather. When we come back, the focus rolls.
Zed 101.9 FM.
Many thanks for staying with us. It's still the Focus on Zed 101.9 FM, and we're still having a conversation on Islamic financing, what it means, and how it's going to support our economic growth. And before we went on the short break, we're looking at what risk there is to financial institutions who want to engage in this form of financing. Now we're going to look at what financing models, arrangement the lender can enter into with the borrower. If we're saying that the lender cannot charge an interest, how can it work with the borrower so that it's able to obtain its maximum returns on the amount given? And I'll start with John.
In terms of the financing models, I mean, in Islamic banking, they have about, 4 general ones, and I mean, there are some Islamic names attached to it. I don't know if I'll be able to mention the Islamic name well. I'm sure our listeners will judge. But they have something called musharaka.
Okay.
Now, the musharaka work this way. It's more of a partnership agreement where the bank will give you the capital and then you provide your expertise and skills. They will not interfere in your day-to-day activity, just that they will be monitoring. And you only agree on a profit sharing ratio in terms of maybe when there's profit, 20%, 40%. So that one is predetermined, but it's not guaranteed. So what it means is that if you make a loss, the bank does not need to be compensated because you have made a loss. I mean, it's eating into your principal. So they will allow you, and then maybe they will see how you can restructure the business to come into profit. This whole idea is coming from the point of risk sharing. They believe, in the Islam, one of the main principles is that, when it comes to giving money, you should also share in the risks. You see, in our current conventional banking system, it's more of, once they give you the money, the whole risk is on the borrower. Whatever happens, you must get money. If not, can even go to court and you can be jailed. It's possible you did a legitimate business and it failed, but the conventional point of view, they will not understand you. Do you get it? But in terms of this one, if you make a loss and you come and show the figures, they will agree and find a way of, recalibrating the business to do well. Then they also have another one where it's more about joint venture, where you contribute capital and skills together. And then, so that one, they will be part of your board and be supporting you to do the business that you are doing. Okay, so in Islam, they call it murabaha or something. Then they also other, forms where it's more of leasing kind of transaction. So you need an asset. Okay, you don't have, the bank will go and buy the asset, and then they will give it to you and you are using. So as you are using, you are generating profit. You also share the profit with them. Are you getting? Then there's also even a bond. In the Islamic banking system too, they also issue bond. They call it sukuk. Now, for the bond is attached to a real asset, not the normal bond that when you buy a bond, there's a face coupon and like treasury bill. Once 3 months, you're expecting your money. No, for this one, it's attached to real assets. So, for example, if government want to do roads, then they'll issue bond based on the roads. And then they are supposed to, generate money from the use of the roads through road tolls. And then the money they will generate from it will be shared to the investors. So what it means is that if they are not charging the road tolls, nobody gets anything.
Okay.
And so there's a specific asset that is attached, so that your coupon will depend on the performance of the asset. And I think it's good even for economy. We have seen a lot of, we go and borrow a lot of money and we come and use it for recurrent expenditure. I was even listening to the finance minister. He said at first we were using oil money to buy chalks. We were using that you to take. I was surprised. Millions of dollars we were using to buy basic things. But for this kind of investment where it's attached to real asset, if you want to issue bond, you must explain what the bond is going to be used for, and you must monitor the performance of that asset in order for us to get returns. So that will make even the government more responsible in terms of borrowing. So I think if you look at all these various forms of financing, it's something that they want to partner with you. It's more of partnership agreement and profit sharing agreement, where we all share in the profits if we're able to make it. If not, then we also share in the loss.
Okay, so it's more of the lender participating, whether by JV or joint venture or participate in your business or
Exactly.
partnerships.
Exactly.
But let me ask, so you have a situation where the borrower comes for the money, the lender, let's say they form a JV.
Okay.
Along the line, the borrower says, I'm not interested in the business anymore.
Okay, so basically, if I'm not interested, what they will do is that they will sell the assets.
Okay.
I mean, or get another person.
Okay.
Okay, so either they will sell the assets to recover their funds, or they will get another person who is interested to continue the business. But it's more of agreement. You see, it's more of agreement system. It's not like compulsory takeover they will do. They will talk to you. You are not interested anymore. Can we hand over to? Because the money is not yours. I mean, they gave the money. So if you're not interested, either they will get a more responsible businessman to continue, or even sell the assets to get back their money.
But how about a situation where the borrower is just inefficient? He's not going to work. He claims he's working. He's not putting much effort into it. They can foresee the losses.
Yeah.
Would they also have to replace such a person?
Yes. So you see, most often for the Islamic banking, I mean, every time you're giving them updates, if they realize things are not going well, I mean, they will even stop along the line. Either they will get a new person on board, or I mean, they will not be interested financing it again. Maybe they will treat it as, I mean, money they have thrown away and they couldn't get return. I don't know if you have noticed. You realize that you see Arab people doing big projects in different countries. Like you see Arab people come to Ghana, establish mosques and the rest. Ask yourself, what is making this possible? It's the Lebanese and all that. It's based on this kind of financing, because they just walk to a bank. Oh, we have found a very good business opportunity at Ghana. We need this amount of money. As far as the Lebanese person knows that if I make a loss, I don't need to pay anything. If I share, the person is more willing to take that risk to come to Ghana to set up business. So you see big businesses in Ghana, because we don't have access to such financing. You see big business in Ghana being owned by the Arabians, and we are just here. And then I mean, so that's why I say it's a very good thing for us, so that we can also, I mean, take risks. And I think it's going to even increase the appetite for risk. Once you have a very good business venture, you go and, I mean, because a lot of people have been complaining. I mean, they have a lot of business ideas. They are not getting people to fund it. When they go to the bank and pitch it to the banks, they are not interested. But this is something that, I mean, if you prove that it's workable and they look at your projected cash flows, it's something good, they will give you the money. And that one, you are not scared, because see, you don't pay fees, interest, and you know if there's a loss, they will share in it. They won't ask you to pay back the principal, because, I mean, there's a loss. So they'll just look at, I mean, the net, and then you will pay back. So this is even going to increase, I mean, the investment appetite of most Ghanaians to enter into big things. And I think that's the reason why the regulator himself is leading the charge to introduce this. And he knows that if he introduces this system, the lending rates, which he is hoping that it will come to single digit, will happen. Because that competition will also force the banks to lower their rates in order to compete.
Interesting. You seem very optimistic about this financial model the Bank of Ghana is introducing.
Yes, very optimistic.
Right. Mark Jordan, you kept mentioning earlier about some guidelines that the Bank of Ghana has introduced. Can you walk us through a few of them? I mean, what are they? Are the guidelines on the lender, or are they on the borrower, or is it on the bank that is entering into this arrangement?
Yes, so I think so far what we have is the guidelines on, I mean, the establishment. So clearly the lenders, right? The organizations that will set it up and stuff. So I think first of all, the guideline highlights the fact that you must be a body corporate in order to apply for such license. So I think that goes to answer the question that yes, our existing financial institutions, our existing banks can do that. In fact, even
so it means that like maybe Fidelity Bank or Cal Bank today can apply for that license to run Islamic financing.
Yes, they can under the model, under the guidelines.
Okay.
They can, to the extent that even your rural community banks, right, can also apply for a license under the guideline, right? So for now, what we have set out those items, and it's also, you know, set out how foreign participation is going to be like. You know, for our local or our normal banks, the banks we have, there is a guidelines that prohibits 100% like foreign ownership and stuff. So you have to make sure that locals have a stake in there. I think same transfer to the Islamic financing. License as well. I think for that the key or the slight difference is the fact that there's a minimum foreign participation. If the license is going to be issued to a foreign body corporate, okay, then they should have at least 60% foreign stake, right, in there, which I don't see that with the normal banks, right? So right from the onset, I think the Bank of Ghana has done well. The guidelines is right from the onset trying to tackle structural issues, right, in the sector. One, it understands that it will be difficult for us as ourselves as a people to just roll it out. So it's from the onset making it open, so that people or foreign participants can also come in there and also have a feel. And for me, I think they are going to be, to some large extent, the people who really drive the space for us before our local guys probably will come in. So I think it's a great thing so far. And for me also, the interesting thing in the guidelines so far is the fact that the BOG doesn't just give you the license and then what you go do whatever you want to do as a licensed person to operate in the non-interest banking space. It closely monitors what you do. There's great supervision in there, and also the BOG per the guidelines, they even have an oversight over the various products that you issue as a licensee under the non-interest banking framework. Yeah.
Intriguing. But then let me again find out from you. In this space where we have a lot of companies in our country, they have no regard for corporate governance. They don't appear to pay attention to proper structuring. Do you think that this model of financing is going to succeed?
I think if we still stay glued to the old ways, then that will make it difficult to succeed, right? So it will be a clear yes. That is if our SMEs and our businesses do not, wake up to the call. And I think it's a great question you've asked, right? Because all along this while, the talks has been around the setting up of it and then having the lenders or the players come in, right? But we've had minimal talks around our SMEs or our businesses positioning,
Absolutely.
okay, to absorb the funds that are going to come from the non-interest banking, right? So it's a great thing that our SME, so if you're an SME person or a business listening to us, I think you should start working around your formalizing your business, because clearly, right, there's this talk about there's this saying that whenever we talk about finance, we think it is just money moving around, but the truth is that before money moves, trust and credibility must move, right? So I personally will be expecting business to really position well. One, your formalization, and how do you take decisions as business. It will shock you to know that some businesses, if you ask some businesses about their strategy, or their strategic plans or guidelines going into probably the next even 12 months or 24 months, is going to be a headache for those business owners. Yet those business owners think their business is so well to do and then they need support, right? So if you think you need the support, put in place the structures that will help you absorb this support when it comes in. If you don't have these structures and this support or these funds comes in, you are going to face hurdle in your general reporting to your lenders and the likes, right? We have businesses in Ghana making great revenue, but if you ask them, let's say your revenue concentration, where do you have most of your revenue, like some data about it, it will be difficult, and it will shock you to know that they won't be able to provide you with this data. And now we have systems in place that's able to help you take, customer details and the like. So I'll entreat our businesses, right, to really position well in that light, right? How you make money and even how they spend, right, is something that we really have to look out for. And you touched on a very great important point: corporate governance, right? Businesses should be able to put in place the right corporate governance structures that is able to guide the business into the foreseeable future. There are some businesses in Ghana today that, if the owners are gone, and these are not just tabletop businesses,
But many businesses.
these are very big businesses doing well, but if the owners are gone, the business just collapse.
Yeah.
Right? And I think that we've seen clear instances of some of these businesses that were doing well, the owners are gone, and then, we don't hear of the businesses again. Such posture, right, will not really benefit the foundation that our regulators, the Bank of Ghana, is trying to lay. All right. So I think it's something that we have to really look at.
But that means that invariably, this financing model, aside in making capital available, will also then seek to structure businesses and put in right frameworks for businesses from their back end.
Exactly, right. And then even it will go a long way to help us, right, in terms of GDP data, aggregation and the likes. Then we're able to bring more businesses into the formal sector, right? It will even help taxation and the likes, right? And to some extent, even social security collection, our SNIT collection and the likes. SNIT is doing great well, covering the informal sector. But this model also go a long way to formalize most of our businesses, right? Sometimes when we talk about formalization, some business, we think you have to be there making the millions and the likes. And I'll give you an example. My mom runs a manufacturing business. We have about 3 segments. She's done cosmetology for a very long time and also been in the beauty space, right? And for one time, I realized she makes a lot, but you don't really see it. And that was me back then in my uni days. I'm trying to use my accounting 101 to help. Look, the hurdle I faced with even my mother, all right?
You agree? You tell that that's what I've been doing ever since.
Right? But thankfully, we've been able to structure most of the stuff, right? And when we did the structuring, we had, great financing from community banks, right? Because they bought in the idea and stuff. And thereafter, she saw the sense in, the formalization I was talking about all this while. So really, I think formalization goes a long way to help you, the business, right? So we should embrace it well, and I think it will help. That's what will help the space. Other than that, leaning towards our old ways will not help the Islamic financing model in Ghana.
Yeah, John, let me again also find out from you. Now, we're talking of big players versus smaller players. Again, I don't know why this morning Cal Bank keeps coming to my mind. But let's say you have a Cal Bank, which is financing, let's say, an SME. Maybe its entire worth is about, let's say, 10,000, let's say 100,000 cedis. Now, it finances it. Is there no a fear that the lender, who is a big shot, may take over the business?
Okay, so I think one key thing we need to appreciate about Islamic financing is that it's coming to, so there are some frameworks that the objective is to support SMEs. The objective is not really to take over, but to support them, especially when the conventional banking system is not helping, especially in terms of the fees rate I've been charging, and looking at the challenges that even SMEs face. They are not able to generate, enough returns to pay these loans, and they end up using principal to be paying the loan just to survive.
Yeah.
Now, if there's going to be a new financing model, I think especially what my colleague really, advised rightly, and I really love the advice that he gave. I think Bank of Ghana also needs to, let the public know that this financing model coming in requires proper structures and formalization. So this is where you have to even start, encouraging SMEs to be registered, to be formalized, to do everything possible, so that once this thing starts, they are qualified for it. Otherwise, this whole cheap financing system will come, and our SMEs cannot benefit from it. Are you getting it? So the whole, as I'm saying, based on the question you asked, the whole idea is not the bank. The banks are not really interested in taking over your business. In fact, if a bank is even participating in what you are doing, it's just to make sure you are always getting enough money so that they will share. So it's not really about, they are not interested in taking your business. If not, then by the time the whole thing ends, a car bank will be owning about 1,000 businesses. They don't have any business running typical businesses. They are in there to support. And as my colleague rightly said, every SME, this is the right time. You have been borrowing, you have been crying about financing, you have been crying about high lending rate, you have been crying about, the former banking system not giving you the credit you need to do business. We have startup businesses, entrepreneurs always crying, looking for money. The system is coming. That system requires that you have strong structures. You are formalized. You are ready. You are ready with a good reporting system. This is the time to start preparing yourself to get all these done. Because there's a financing mechanism coming that will say, come and take our money, use it to work. When we make profit, we will share the profit. If you make loss, walk away. This is the best kind of financing you ever get in every place in this world. So just get everything ready. And when it comes, you will take advantage. And I'm sure that, as I said, that will even push the conventional banks to know that we are not happy with their risk-based lending. So they must also, move to partner with us to do well than always, looking. There are some banks, financial institutions that, will lend, especially the savings and loans, they will lend and let's say be taking 2.5% per month. Do you know what will mean? Charging 2.5% means? And they lend to SMEs. If you are charging 2.5%, what you are telling the lender, the borrower, is that in a month, at least you should make 2.5%. That's what you are trying to say. Now, looking at how much it's supposed to make to even pay interest, 2.5, then profit. So all these things fit into what? Inflation, and affects the whole economy. So as far as this system is coming, we should get ready, prepare to take advantage. And I'm sure if you do, it will seriously lead to massive economic growth. And I think that's why even Bank of Ghana is very aggressive on it. He even set up a whole department just to promote it, because he knows the benefit that comes out of it.
But do you foresee Islamic financing taking over the financing industry, so that the conventional banking finance may be rendered obsolete at a point?
One thing I know is that when there's competition, there are new strategies. So I don't think the conventional banks will all just relax and allow the Islamic banks to take over. I'm sure what they also do is that they will bring nice products. That's where competition is good. Do you get? They also even bring something more appealing. By the time you realize, they are also bringing products that are more appealing than even, because when people start making profit out of the business and looking at how they are sharing that profit with the bank, they will have a second thought. You get it? They will now be more interested in the first interest than, especially if the interest is low, than. So assuming the interest is, let's say, 8%, but in terms of profit sharing, you are sharing 20-80. You get to a point, no, I want the bank. So I'm sure the conventional bank, because outside, the Islamic banks are operating, the conventional banks too are doing very well. And you see those banks with low interest, very low interest across the conventional banks in other countries. So I don't think they will just look on to be obsolete, as you are saying, but I'm sure they will also, as I said, when there's competition, people will strategize to, stay afloat.
Mark Jordan, when we were discussing the guidelines, I remember you mentioned a part on corporate entities. Does it mean that this financing will only affect borrowers who are companies? So let's say we're sole proprietors or enterprises. Do you think they can benefit from this form of arrangement?
Okay, I think it's a great question you asked, and that gives me the chance to really clarify on that end. So that was for the lenders, right? The lenders who will be given the license to do that. But in terms of customer base course, just like other financing models, it is actually open to I mean SMEs, individuals, and the likes. But yet again, like what we've been saying all this while, formalization and then I mean great form of understanding of your business will really help these lenders. So we should embrace for that. And just to also touch quickly on what my brother was mentioning and the question he asked on whether we foresee this form of banking overtaking the conventional one we have already. I think right from the word go, what we have already, if you look at the talks, it's always been around how the Islamic banking has a cheaper source of financing and the stuff, right? But I think most of us are also not asking how they'll get the funds to lend. And that's what is going to give commercial or the conventional guys the upper hand for a longer while. Because how do they mobilize funds? Yes, they mobilize funds through their, CASA, savings account, current account, savings account, long deposit, fixed deposit, and the likes. Now, the ordinary Ghanaian I know, right? Imagine if you see two banks, your GCB and let's say another, or let's say Bank A, right, who is a conventional bank, Bank B. You know how they deploy their assets. They deploy their asset into through the Islamic or the non-interest banking realms, and you know the other. I mean, as a depositor, you might be quite skeptical, and usually you lean towards the interest banking guys, right? So really, with that alone in place, our conventional bank will always have that mover advantage. So because of that, it will take a long while. Mind you me, as we speak, our conventional banks already have over 350 billion Ghana cedis in deposits. You are now going to start from fresh. It will take time. What I see is a complementary role from the non-interest banking. And I think my brother has really touched on it, how it will really help to beat down interest rates. And it will also help us to align interest rate dynamics to macroeconomic dynamics. You know, we learned in textbook that interest rates are really determined by inflation and some other premiums, right? It's unfortunate. And then we also learned that inflation is the highest bit of it, but it's unfortunate that's not what we are seeing. We currently have inflation as low as 4%, below 4%. But I mean, the average lending rate is still up there, right? So it will help it. I see a complementary role rather than it taking over.
Okay, but then with our SMEs and businesses, do you think they know of these financial models? Are they? Is it well understood? Because I'm sure for a lot of people listening to us today, this is the first time they are hearing of this form of banking or financing. Do you think there's a lot of education in that regard?
As a people, we haven't really learned a lot about it. And let me tell you the truth. It's even bad to the point that you can have someone with a banking and finance degree from one of our top universities, and the person had never learned about Islamic banking, right? That's how it is, right? And so we really need massive education, and I mean, kudos to Zed Media for leading the charge. There's a lot that you could have talked about today. I scrolled through a number of media. I mean, we are all talking about the waters and still given the recurring ideas that we've been saying every day that no one is listening to. But you took it upon yourself to go this route today. So kudos. We'll need more of this going forward. Very insightful education around the new niche in the banking space. That's the non-interest banking. And so I'm sure maybe the BOG hasn't really been up for it so far because it is still in the setup stage. When it is up and running, we'll hear a lot. But it will be great to even start hearing it now so that when it is up and running, it just the people understand. So I'll say it's a no. Our SMEs don't really understand this model well, and we'll need great education for them to understand it.
Yeah, because I guess if they don't really understand, the person's mind will be that when you come into my company, you are taking it over.
Yeah.
And we've heard of stories of some investors who do that. They invest into your business. You wake up one day, realize you are no longer even a director in your company.
Yes. So I think that's another thing that businesses will really have to look out for. Putting in place the right structures. I mean, reading their documents well before undertaking any investment agreements with any investor. All right. And also, businesses should be aware that, I mean, as a country, our businesses are regulated by the Companies Act, right?
Yeah.
So, I mean, having really great understanding of how this act works also help you to know whether the takeover someone is claiming over your business is a legal one or not, and then you can, I mean, take the person on, right?
How many of these people have enough money to go and litigate such a thing? You know?
Yes, but you know, I think we always, I think the way we are looking at SMEs, we are looking at it from a wrong, like, not the best of light or perspective, right? We're always seeing them as small there, so they can be cheated and the likes. Even with the rates at the bank. You know, last week I was telling my colleague after the show last week, I was telling him about how we are talking about how there's been economic transformation, we are not feeling it. Look, if we don't have the right businesses or the right people running businesses, it will be difficult for them to pass on macroeconomic gains to the microeconomic players, right? Which are largely households and very small businesses, right? So we really need, and for me, it's a plea to our SME guys. They are really doing a great job already. I think over 60% to 70% of our GDP is powered by these SME guys. They are really doing great, but my plea to them is that we beef up our works around it and understand how our businesses operate, and even the ownership structures and the likes. It will help. And read the documents well. It will help save a lot of time in the future and unnecessary takeovers from some investors. Yeah.
Absolutely. John, maybe let me just come to you about my last but one question. In all of this, after government has, through the Bank of Ghana, put in structures in place to get this financing model running, does government have a role to play in creating that viable economic space for because if they get the money but they can't invest it into any good sector or industry, it becomes worthless. And at the end of the day, everybody is making a loss. Does government have a role to play ensuring that now when they get the money at the back, when they go onto the field, things are actually running, that they can recover their money or their profits?
Yes, I mean, as for governments, in everything, they have an important role to play because, I mean, they are the big players through regulations, through, lot of, utility expenses and all that. I mean, we see, what I can say about government support is that, I mean, you are bringing a new financing model. And I'm sure the motive is to really help SMEs and maybe help new entrepreneurs and the rest. So you need to also create that, good business environment for us, especially in terms of, the macroeconomic variables. We still need to keep the figures, good to make it easy for, demand to be created. Okay, because if you want to create demand, your expansionary policies, your contraction policies, like these kinds of road projects, you have to find a way to partner SMEs. I'm sure maybe even if some of these these big push projects that are ongoing, if we partner with SMEs to also, they don't have big machines and the rest, but if we can partner with them to also do the small works, people can go and take these monies and go into such projects. Because government is, you are the highest spender, no matter what you are. So you can be more targeted in terms of specific projects that you want to encourage, agriculture, tourism, and you are directly promoting certain, industries that people can easily venture into to do business. When it happens that way, people can take advantage of this new financing model to, also tap into such opportunities created by government in order for us to see the benefit. If not, the new model will come and then we'll still do the business as usual. Those ones will not provide any meaningful returns. But once government decides that, okay, this is a new financing model, it's about profits loss, this is the sector I want to promote, you create that enabling environment for people to, go into it, to partner with, a lot of SMEs, and you give some government projects to them. Because, if you assuming government give about 1,000 projects to SMEs, you see the benefit, the employment that will be created, the addition to the economy that we are going to see. So government, as for government, it has a very important role to play. In fact, I would say largely, the success of this new financing model also depends on, the actions they take, and we should be more targeted in helping SMEs grow.
Right. That's a contribution from Nana Safwe J. He says, Kudos Zed, listening to you live from Koforidua. But Jordan, I think he asked you a question. Please, when you say SME should get ready, what exactly do you mean?
All right. So when I talk about SMEs getting ready, and so this model is going to make funds largely available to SMEs, right? But from all what we've discussed, it is clear that it is not going to come as free money. And given the fact that it's going to be risk-based, the lenders from their perspective will really also have to understand your business, what you do, how you make money, how do you generate cash as a business, right? They are going to look at those key things. And looking at those key things, you are going to provide them with that data, right? For instance, if you're a business that has been running for the past 5 years, what has been your average revenue for the past 5 years? For the past 5 years, on average, how much have you been making as a business? How much have you been spending in terms of cost? And then what has been your profit as a... They will have to understand this. This will give them a clear sense of what the future will look like, right, for them. So when I talk about SMEs preparing, right, to absorb these funds, these are some of the things I am talking about, right? Taking the right data and then reporting right on their financials. And also, having the right people to run their business, or recruiting the right personnel. Because if you are going to if you are going to get funds, right, then you should have the right people with the right mindset who will work with this money to generate, extra income that will make it viable for these SMEs, right? And as much as possible, try and make the business improve the business continuity, so that when you are not around, the business can still run. So when I talk about
continuity thing is a very big issue in our part of the world.
Yes. So it's something that we really have to look at. SMEs
Most businesses are tied to one person.
Exactly.
When a person is no more, even if you travel out a country for a year, the business will collapse.
Exactly. So when I talk about preparing, these are the things I'm talking about as businesses. We should be able to do that. You should be able to reach out to experts in subject matters. Even concerning finance. The fact that you are SME doesn't mean like you should run the business all knowing. Okay, so when I talk about preparing, they should be able to set up this platform that will help them absorb the capital. Yeah.
John, do you want to weigh in?
Yes, and I want to add that always we're asking SMEs to prepare. One way is to also get finance professionals to help. There are a lot of finance consultants, a lot of financial analysts. You can get them on board to just help you structure your reporting.
Yeah.
Maybe it's possible that over the years you don't have any proper records. Get some of these guys involved. Let them prepare at least 3-year financials for you. Because the banks, without any data, they will not be willing to support whatever you are doing. So this is the right time. Once this is coming, this is the right time to get finance professionals to help you restructure your financial statements,
Yeah.
your reporting, everything. Maybe if you don't have corporate governance, any structure in place, get people involved and lay out a clear structure. If you don't have a business proposal, this is the right time to start writing your business proposal. Don't wait. Otherwise, by the time you wait and you are now writing a proposal, people have already sent it and they are getting the funds. So just get your proposal ready, get everything structured. If it's about the financial issues, get a financial consultant or financial analyst to help you restructure, your reports in a way that suits, some of these, financing requirements. Once you're able to get all these things ready, then once it starts, you're also in to
So
benefit massively.
I want to be even practical with when we say corporate governance, it looks like something big to these SMEs. For instance, you are running a business, right? An SME business. And when we talk about corporate governance, we are trying to say that, look, put in place structures that makes it difficult for you to take decisions on your own. Decisions on your own, right? So, for instance, you have something we call a board. A board can be any number of people beyond, I think, 3?
2.
Beyond 2.
Yeah.
Yes, beyond 2. But for, better decision making, odd numbers, are preferred for good board structures. So that when we are going left, there's clear that about 2 say we are going left. So there's clear majority and the likes, right? So I think that, okay, reach out to, and we are saying, and on every board, you should have at least like someone with good finance understanding, someone who understands how money moves, right? So you can talk to a friend who you think probably, I think that's our problem, right? We're always looking at the big people, right? You can talk to a friend who did accounting, right? And can help you, who did probably banking and finance, and has a degree around it. It's a first level that they have some understanding of that space. And with the level of business you operate, they can actually help you, right? Exactly. They can be on the board. And if this is someone that you really know, let the person understand what you do and the fact that, from the beginning, it's not going to be rosy like that. Just put in place that structure. Imagine if you're a lender, you have 2 people, someone comes and then same business, but then they just have this structure in place. That alone sends or tells you how serious. They are. And that alone can, they can have your bid for such thing. So practically, I think this is a 101 lesson for them. Yeah.
Absolutely. I call, there was an institution I used to be part of, and anytime we go for a meeting, the secretary, he'll be sitting there looking at our face, we'll be asking, won't you take minutes? So the minutes is in his head. So then one day he says he resigned. So then all the decisions we've taken, there's no record of it.
He's taking it away.
He's taking it away. It's always in his head. He remembers. These are just basic things. There was another business I used to assist. And it was more of, initially, yes, he had started as a sole proprietor. But he didn't understand how, when he makes his profit, he shouldn't spend it. Because he told him that, look, in my house, so I tell him that if electricity bill is due, I should say I don't have money when I have money from the company.
my mother's problem.
Exactly. Immediately there's a cost. He's using the money there. You see, at the end of the month, he has no money. He starts afresh, 0. Which, these are the structures. I guess we are saying that these companies should distinguish the business from themselves. That the fact that I have money in my business doesn't mean I'm rich. So I'm going to buy a new car. I'm going to buy a new this when it doesn't affect the business anyway. But I guess we've made a good call for companies, SMEs, or any other company from with putting in the right measures and institutions or structures in place to ensure that they take good advantage of this. But maybe let me just ask a very simple anticipatory question: that don't you think that these banks, when they enter into the system, they may start discriminating? They'll intend to lend money to, let's say, bigger companies as opposed to smaller companies. Because on the scheme of things, it will look like the bigger, quote unquote, companies would or have a great propensity of making the necessary returns for them to recover their money. Wouldn't that be a fear for the bank? So that if, let's say, John Che, you come with your new business, okay, they've seen your projected cash flows, but there's no real record. compared to a company that's been existing for, let's say, for about 30 years, that they can see their exact track record, wouldn't they start discriminating?
Yes, it's possible that it will happen, and it's likely to happen. But you see, the issue should be more guided by the regulator. The regulator must have an objective of bringing this on board. And I'm sure in the minds of the regulator is maybe thinking of SMEs. Okay, so when it comes, you prioritize SMEs. You make sure you regulate in such a way that you ensure the banks are giving to the right people that you were targeting.
Okay.
Do you get it? Because if you don't do that, in terms of structures.
So you think that this should be legislated?
Yes.
Or should be in their structure?
It should be regulated.
Okay.
In such a way that, because you see, the issue is that when it comes to, let's say, systems, everything, the big players will always be on top, because they have well-structured board and everything. And for them, I don't think they struggle with even conventional banking.
Yeah. So
if we really want this to work for our SMEs, then the regulator should be very active. And the guidelines should be in such a way that, there are specific financial models for SMEs, which require that you must give it to these specific, groups of people as far as your lending policies are concerned. And that should, otherwise, the big players will take over, and then whatever we want to get from it, SMEs will continue to suffer with lending. So I feel the regulator must really play a key role in ensuring it gets to the small players, because that's what I feel we want to promote.
Okay.
So practically, right, like we did for the LD ratio tied, cash reserve tied to LD ratio, which was able to show up lending to the private sector significantly between 2024 and up until now when it was revived. These are very practical steps that the regulator can take, right? And not just put it out there, incentivize them to also, maybe not necessarily tied to cash reserve this time around, but let's say your lending, your loan book to SME is probably tied to your tax or something. So you have a tax incentive when you lend to the SME, right? So these are practical steps that the regulator can look at in order not to crowd out the smaller businesses when this non-interest banking model is eventually rolled out. I just wanted to add that to what John said.
Right. I think that if the regulator is listening to us, this is something they must take quite seriously. Other than that, we'll enter into a space where it's just the big businesses who are benefiting from it. Yeah. Then our business, which we are starting, that we need most of this, even to benefit from their expertise and all that, we'd rather be cut out than we'll just go back to square one and would have just missed out on everything. Gentlemen, let me take your final words. If the regulator or the government is listening to you, what do you have to say to them on this financing model?
Okay, so I think my last words would be that strongly I've realized that the regulator is really pushing this financing model, and there are clear objectives. And I think the regulator should be very intentional about getting these funds to the SMEs, making sure all the players who sign up to this financing model are getting the money to those that need them, those that really need them. And as my brother said, the use of tax incentive and all kinds of approaches can be adopted to ensure that the monies get to the SMEs. Because I think it's high time we support our SMEs to do well as they constitute a larger part. And this is really going to be a cheap source of funds for them. And this will even be better than that fixed rate they have been complaining about, because I think high lending rate is one of the major problems as far as SMEs are concerned. So every policy that is being developed around this area should seriously target our SMEs to make sure they get enough of these funds as these banks are rolled up.
Right, Mark Jordan.
Thank you. So if we have the regulator, government listening, for me, my words to them would be that they've started a great job, and so they should keep up with it. Why? Because the space is a booming one. As of 2024, we had about nearly 3.4 trillion in assets in the Islamic finance space globally. It added about 500 billion. It's projected to hit about 7.5 billion just 2 years from now. And this very significant amount of funds, which we can position well to attract as a country, right? Because I mean, these are going to come in as FDIs in those space. So really great potentials for us as a country, right? And also for me too, because of the fact that it pushes our SMEs to be formalized, right? And then it helps us and the like. So, and also gives, has the chance to give our SMEs the needed financing, which we've all been advocating for over the years. So it's a great thing that we really have to approach. And then to our SMEs, we've mentioned that we have to really lay down the platform and the foundation to really absorb these funds that are anticipated. So yeah, we look forward to it. Yeah.
Absolutely. We all look forward to it. We look forward to how Islamic financing is going to boost our economic growth. Gentlemen, thank you so much for helping us in the conversation this morning. And I've been joined in studio by Mark Jordan Sikanate, who is a senior research associate with Lawrence Africa, and John Che, who's a financial analyst. Gentlemen, thank you so much for your insightful thoughts you have shared with us this morning. And thank you for spending your Saturday morning with us.
Thank you.
Right, and I also must say a very big thank you to everybody who spent their Saturday morning, whether by ear, sight, or sound, for spending your treasured time with us in having a conversation about Islamic financing and how it can benefit our economic growth. We are truly grateful. And I can't end the show without saying a happy birthday to a very good friend of mine, Nancy Thomasina Ejekum Esquire, who I always describe her as a lawyer from just 9 a.m. to 12 noon, and the rest is just soft life. I wish you the best and have a happy birthday. And thank you everybody for joining us. We're hoping that this Islamic financing model will be a success, and it will be a success to benefit our economic growth. I always say that we have just one Ghana. We have just one Africa. We have a decision to make, whether to give up on Ghana or whether to make it better. I choose to make Ghana better, and I hope everybody will join in this train. Thank you, and have a very good weekend. We shall meet again next week. God bless us all.
Zed 101.9 FM.